Monday, January 29th, market analysis, Stan Ehrlich. Good morning. 9:50 California time in a couple seconds. I start out with stock market indexes, as most of you know, and no different this morning. Then go to futures markets, 23 of the most popular, and sometimes cycles, sometimes sectors, sometimes forex. We'll see what happens. The E-mini March futures contract specifically is up very slightly this morning, about 10 points, very minor, and has a doji, meaning today's low is above yesterday's low, and today's high is below yesterday's high, called an inside trading range, doji for Japanese candlesticks. The current quote is approximately at the highest previous close for this bull market, which was last Thursday. And on Friday, we had a little bit of a slippage, but nothing particularly important. What I am pointing out, and that is important, is that now we are 5 days into overbought conditions, and 4 of those 5 days have been just basically sideways, including today so far. So is this market trying to top out? I think so, because of the overbought condition, and we've got about 4 highs in a row that are almost the exact same price, establishing a little bit of resistance area. So if I'm right, what are we going to get on the downside? Well, I've been talking about 48.40, 48.41, 2, back to some support, the highs that we saw back in December and early January. And I cannot rule out something a little bit more significant down to 47.20-ish, the bottom of that same time frame, which included a bearish engulfing ER sell signal, which didn't work. But those signals are sometimes part of the topping out or bottoming out process, and not necessarily like I like the exact high day, which was on July 27th of 23 for the top of the rally to the exact day. So maybe I'll get another one at the top of this rally, which means you have to get above the previous day's high, not by anything more than one tick, maybe a few, maybe a little more, and then in overbought condition or recently overbought, have a bearish engulfing Japanese candlestick. That's going to create a red bearish bar, and probably, no guarantees obviously, the beginning of a downside swing to the numbers I just mentioned. Next chart is the spider, and it has the same situation, overbought for a little bit more time. Now this is the 6th day, but still 4 days, last 3.5, resistance. The bottoms have been climbing a little bit better, but that really doesn't mean too much to me. It's the overbought situation. So I'm looking for a retracement back down to some support, 478-ish, and maybe back down to 468.30-ish. Next chart, spider 1 minute. We're starting to come down slightly in the last several minutes. Normally doesn't mean much. We opened this morning, dribbled off a little. There's a small little bottom formation right there. And rallied to minor new highs for the day, slipped to minor new lows, and now we've come back close to the highs, but we're, sideways. Next chart is DIA. Friday, we had a new high and a closing price above all previous closing prices. And that's a new historic high for the Dow Jones. So, not quite overbought, amazingly enough. We're still under 75. This is my custom relative strength index chart at the subgraph on the bottom. I learned RSI from Wells Wilder himself, and stochastics from George Lane, and Bollinger Bands from John Bollinger, whatever. So this is my modification of Wells's RSI, and it's not exactly the same. There are a variety of things that are different, not let alone the way it's plotted. So I'm expecting retracement. That's all there is to it. It hasn't started yet. I can't get the darn thing to really kick in. Now with the DIA, you could say that we had the retracement already the middle of last week. It came down to about where I expected, but nothing else did. And therefore, I think the DIA, when everything else starts to slip, is going to break these minor new lows of last week and come down to probably 371 and a quarter. Next chart, Russell 2000, not quite the same at all. Major top in overbought December 27th. Had a very nice, significant correction, no surprise, got oversold in support and turned around and has been trying to accelerate upwards since. But now it's stuck for the last few days, just like basically the other indexes. There's a small gap to come down and close, and maybe we'll test that support level again. So I am expecting the Russell to have a retracement also, of course. And the QQQ, overbought now for the 7th day, quite a bit, has 1 and 2 small gaps to close below the market. So coming back to 408.80-ish would not be a surprise at all. And support starts at 414.20-ish. And I cannot rule out something as significant as 386, but that would be my most aggressive bearish correction level. And I'm doubting that we're going to get down to there. And lastly, the NASDAQ futures contract, the March NQ, I think it's going to come back to a minimum of 17,115, or maybe back down to the support area at 16,400, 300, 200. So 16 in small numbers. Futures, let's look at the futures market. Now we start out typically with the E-mini again for a little bit different perspective, but the percentage retracements are the same, or rather the amount of retracements the same, and the timing, of course, it's the same contract, same chart. By the way, you got any questions, you want some information, info@ersignals.com, right there. Next chart, NASDAQ futures. Same commentary, but now it's starting to come out of the overbought conditions slightly. Still very, very close. No change of comment, opinion numbers for the NASDAQ, but bonds are rallying a little. That's helping, I think, these indexes to hang in there, so to speak, for at least today. Bonds are up a full point, which is not bad. That's pretty decent. And a minor new high for a couple of days, Thursday and Friday. But nothing, no breakouts, no major formations, only a previous test of support, which I pointed out at the time that it happened last week. And it did get oversold almost in support. So rally, no surprise. But I don't want that. I want bonds to go sideways a little bit more, frankly, to drop into the support area a little bit more, and then help the indexes drop down a little bit more, and then everything up, probably a week or 2 or 3 from now. I can never make the market do what I want it to do. I can only move with it. So let's see what happens with this. High and last at the moment, basically. Maybe it'll slip back down, modest amount. 10-year notes, same story. Not quite as strong. No new high from yesterday, Friday. Sideways range now for a little bit over a week at support and a little bit above. Basically the same comments. Crude oil. Overbought for 2 previous days, last week, Thursday, Friday, today. Higher opening, but overbought still, and a current quote near the low of the day, below the close of Friday. Excuse me, net lower by 1.16. If we get below Friday's low, and we are not very far away from it, we will generate a red ER sell signal, which we've got. Watch this coming up here in a little bit, guys and gals. Cocoa and cotton have got sell signals last Thursday and Friday, respectively, and they're doing okay. So this one might do the same thing. I hope, maybe. Stay tuned. Next chart, slipping natural gas, probably going to make new lows, probably going to test the whole low of the trend, 1.844, and probably going to break that as well. Bearish, looking for new lows. Heating oil, overbought, possible reversal. If it gets down below yesterday's lows, then I will also get a bearish engulfing red ER sell signal, but it hasn't happened yet. We got a whopper over here, way over here, last, what is it, January 24th of last year. And that produced the beginning of a big move down. Wouldn't be surprised to see the same thing, but I don't have the signal yet. Next, gold. 2023 was just a fabulous year for gold and silver for our trading system. We had some incredibly good signals. We had a buy on September of 22 at the bottom of the break, but then we had a new short sell on the top, a new buy signal on the bottom, a buy sell, that's a bad signal, lost a little money, a sell signal on top, a buy signal on the bottom, a buy signal on the bottom, and recently a sell signal on the top December 4th. And it has turned out to be the head, I think the head of a head and shoulder top. The markers are there to mark the shoulders. They dribble down a little bit. Trade station is not behaving. The arch marks are floating down. That's not good. So we are still below the neckline, but it is not acting normal. Once you break the neckline, which was actually back on January 17th, you're not supposed to go back up above the neckline again. That's the neckline. And it did. But then it went back below it again at the end of last week, which turns it back into a, well, looks like it's a good formation now. And at the moment, we're smack dab a tick or two below the line. I mean, we're just sitting there. It needs to go south ASAP. It needs to have new lows for the trend here below 2022 soon this week, or it's just starting to do what it's not supposed to be doing, going up or sideways. Now, sideways is sort of acceptable, but usually these formations, and I've seen thousands of these things over 52 years plus, used to draw them by hand back in the 70s. No internet, the Apple computer wasn't even invented. Everybody used a pencil, paper, and drew charts by hand on daily data charts. Everybody. So this isn't doing what it's supposed to do normally. Let's see what happens. Silver. Rally today, minor new highs for a week and a half. Trend is a little ambiguous. We haven't gotten any new lows for a few months. We got no new highs for a few months. The last high was a great sell signal, smack dab on top, same day as gold. And we had a great sell signal back here on September 1st and the top of the market again on July 20th. Come on, the low of the market exactly on May 26th. And unbelievably, two sell signals on the two exact highs on a double top formation. On the first one, it was April 14th, and the second one was on May 5th. Wow. And the bottom of that huge break on March 10th. Okay, enough. Not quite sure about silver. Kind of iffy. Kind of wait until we get something a little bit more solid to work with. Platinum, bouncing out of support after being oversold. No surprise. I really don't think it's going to go very far. I can't make a long-term bullish call on anything here on platinum. So maybe we're going to get 970-ish. And there's a chance it could get back to 1017, although that's a little bit far-fetched at the moment. So friendly for a short-term week or two. Next, high grade, copper. Almost a bullish engulfing. And that probably, if we have one, will help it get up to the resistance at 3.95-ish. And then it's probably going to get overbought because we're not far from it already, and turn back down again, because that would be the rock or hard spot, and that's the hard spot of the rock. It's bouncing between the two support and resistance red zones. Next chart. Soybeans, new lows for the whole trend here since June of this year, where we got a bullish signal just in time for that big rally. And we got a sell signal almost on the exact high day, and a buy signal on the low day here on October 12th. Now, oversold again, just barely, breaking into new low ground for quite a long time period. Probably going to drop off more and get a little more oversold for a few more days, maybe during this week, sort of, and then have a bounce. I'll try to call it when I see it, but I'm frankly expecting it to come down to maybe 11.11-ish. Down a little bit below 11.20. That seems quite reasonable. We're 11.94 at the moment. Next chart. Bean oil, new lows for the trend. All these grains look pretty bearish on the average. Corn and wheat included. We'll look at meal in a second. Bean oil, new low close, probably. Heading south, Tierra del Fuego, land of South, nickname of the southern tip of South America. Almost oversold, not quite. So now another day or two down. Probably testing, yep, the lows that we saw way back in May of last year. That would be 42. Yep, a little below 43. Next chart, meal. It made a new low, but we're currently trading a little higher than yesterday's close and trying to kind of bounce off this trend line. I'm not doing a very accurate job of it. Pardon me. And we have a support area still a little bit lower. So I cannot rule out the support level being tested. And that's right around 335. I don't trust this bounce. I think it's going to keep on slipping. Corn, keep on slipping. Oversold again. Almost a total new low. I'm expecting it to continue chewing its way down until we find some kind of a major bottom developing, probably containing some ER green buy signals. We got a nice one right there. It was only a 1 week rally, but it was exactly the low. And a few other good signals in the corn market last year. Next, wheat. Well, starting to slip. I think it's going to go down just like it has been for months. Long-term bear trend. They do bounce occasionally. Last one got overbought at resistance, turned down. Looking for new lows for the whole trend here. It's going to take a little bit of time, probably another couple, 3 weeks, because I don't expect it to crash. I kind of expect it to chew its way lower. Next, cattle. Overbought now for the third, fourth day. Got to resistance, not stopping at resistance, but we do punch through sometimes and then flip-flop right away. The overbought condition is pretty significant. It has been up to almost 90 for the, looks like it may have hit, 89 something. And that's pretty high. So the odds are stronger and stronger, in my opinion, that we're about to have that downside correction. I would love to have a bearish engulfing ER red sell signal, but you don't always get them on top like that one. September 19th, the high day, like that one on January 20th of 23, and like that one on June 7th of 23. Too bad I'm not picking up any green on the bottoms that are great. That one was okay. Next chart. Resistance, overbought for Miss Piggy hogs. Looks like it's about to turn back down and hasn't started to do so. Any moment, any day here this week, I think. Next, OJ. Okay, fine. Now we're overbought again in orange juice, and we've seen a rally out of the final leg down which did get within extremely close 1 point or so of the downside objective from a head and shoulder top that I outlined before it even started to break out, before the last shoulder high even. So that pattern worked great. Head and shoulders are my favorite pattern. We picked off the first shoulder with a bearish engulfing ER sell signal in red. We picked off the head of the formation, the exact high day, with an ER sell signal in red. The last shoulder didn't have a signal, not uncommon. Usually doesn't get that overbought in the first place on small rallies for last shoulders. Objective being essentially fulfilled, starting to get buy signals. Now the rally has occurred past tense. We're about to turn back down, probably just a little bit higher. Watch orange juice for new sell signals or signs it's starting to resume its bear trend. Here we go, ladies and gentlemen, cocoa. And it's rallied a little bit in the last short hour or so since I last saw it. We're now short ER3 at the red dot and have a very teeny weeny loss. The short sale was the price of 47.23, and we're last at 38, 47.38. Our initial stop, which is going to be changing very quickly as markets move down, if they move down. Otherwise, it may stay the same at the worst case scenario, 48.41, but it's probably going to start to move down. So we got a sell signal on Thursday. ER1 is short from a little bit lower, 46.50 we'll call it. And ER3 just got short today. Keep your eye on cocoa. Next, coffee. The head and shoulder top I've outlined a few days ago, sometime last week, does seem viable. We are right around the last shoulder high. The neckline is almost flat, upward slanted very slightly around 175. I am now going to put in the downside objective because you measure from the highest high down to the neckline on the same day or time frame. Kill the extension here. And this is what's called the depth of the formation. You take that amount and you measure from where the neckline you think is going to get broken. Let's go for a few days from now and a little bit lower. The minimum downside objective is going to be 146.75 if this pattern works. A little premature because we're only rolling over, going down for 1 or 2 days, so to speak, from the last shoulder high. So this is a brand new head and shoulder top, maybe, probably, I think so, to keep your eyes on. And it's got a very good downside potential at 146 approximately, right back to the August, September, October bottoms. This one's one to be watched closely. Sugar. Resistance area did stop at in overbought condition, no surprise. Thursday down, Friday down, Monday today is down at this point, moving out of overbought, looking for a move down to probably 21.90 at a minimum, and maybe 2016. Next, cotton, the rag. And this is how it should go. ER, new short sell signal on Friday. I told you at the time it happened. ER1 is short at approximately 85 flat, give or take a few ticks. ER3 got short today at 84.98, the red dot. Very close to today's high. Great. Currently profitable in both trades. 84.41 last tick. Maybe going to make a new low close. It's already made a lower low since the signal on Friday. So far, this is developing with my strategy, ER signals exactly. Well, I could have sold the high of the day today, but that doesn't happen that often, and it does sometimes. So good news. Let's just keep it slipping a little bit more. Nowhere near oversold, so there's lots of elbow room. I would expect to see this market come down into the red support levels, 7,900 down to maybe 77. Back to the E-mini, starting to slip just a little bit. Russell Spider at the moment up only 60 cents, which is very small. These markets feel today like they're waiting for something. And usually the answer to that is some kind of government report in the next day or two or three, or even in a few hours. But it's kind of late in the day for something to happen. Thanks very much. You guys have a great day. Talk to you tomorrow. Signing off.